Hello, my name is Mary Isaac and you're welcome to the Tutor. Today we are going to solve the third question on the accounting equation. Good. So we have this question on our screens. The question says we should write the likely transactions that might result from these changes in the accounting equation. Okay, so we are going to state the transactions that are taking place. Okay, they've given us the increase and decrease. So we are going to state as free as possible what transaction are what taking place. So we'll start with the I. The I says increase in capital and increase in land and building by 42,000 Ghana cedis. Good. So what will make our capital increase and what will make our land and building increase? Good. So we have to come and think of it that, as we said in the introduction to accounting, that when the owner introduces something into the business, it is termed capital. And as the owner is introducing, injecting, the capital is increasing. So now the question is telling us that the capital has increased and land and building has increased. So that means that what we used to start the business was land and building. Do you get it? Because the question said increase in capital and land and building. So that means that we started the business with what? Land and building. Do you get it? So initially there was no land and building and now we have land and building. So our land and building has what? Increased. That's what the question is trying to tell us. So we can say started the business with 42,000 land and building or started the business with land and building 42,000 land. Do you get it? So okay, so any term you use is okay for you. Someone will use comment. Okay, good. So we move to the second transaction. The second, it says a decrease in stock and a corresponding decrease in capital by 7,000. Good. So what will make our capital decrease? So as you know that if the owner is injecting or putting money into the business, our capital is increasing. So what will make our capital decrease? Okay, we know that the thing that will make our capital decrease is drawings. Okay, good. You know the thing that will increase our capital is what? Profits. Okay, good. So now it says that what? Our capital has what? Decreased by what? 7,000. And our stock has also decreased by what? 7,000. So that means that we knowing that the things that will affect or decrease our capital is drawings and it's telling us that decrease in stock. That means our stock has decreased. That means that the owner has taken goods out of the business for his personal use. Do you get it? When the owner is injecting into the business, okay, it's adding up to the capital. When the owner is taking from the business, it's subtracting from the capital. Do you get it? So now it says a decrease in stock and a corresponding decrease in capital. That means that the owner took goods worth 7,000 for his personal use. Do you get it? Good. Look, so so if you want to cross check that what we said is true, we can see that if the owner takes good, our stock will decrease, right? And it shows there. And if our capital has also decreased, that means that he took something from the business, therefore our capital has decreased. same to the first one. When we are starting a business with something, our capital is going to increase. So when we start with land and building, 42,000, our capital has increased. Then the other account here is land and building. We have no land and building. Now we have 42,000 Ghana cedis land and building. You get it? So our land and building here are going to increase. So we move to the III. Now it says an increase in equipment and an increase in long-term loan by 16,500. Good. So here, what will make our equipment increase and also our loan, which is a long-term loan, also increase. Good. So we have to come and think of it that if loan is a liability, so if our loan has increased, that means that we've gone for loan. And when we go for loan, our liability will increase. So the question here is telling us that the loan has increased. So that means that we've gone for a loan. You get it? So it has made our liability increase. Now we are liable, we are more liable to pay some loan. You get it? Good. So now our equipment has also increased. So between these two accounts, what is happening here? You could see that the question is trying to say that we receive loan to purchase an equipment. You get it? Because when we receive loan, our liability has increased. And the question says increase in long-term loan. You get it? Now we are owing more. It has increased our liability. You get it? And now we receive the loan to purchase an equipment. You get it? That means that if we had zero equipment, now we have more equipment. So increase in what? Equipment. Do you get it? Good. So with this one, we can say that received loan, received 16,500. Loan to purchase an equipment. You see. So when we want to check if it's correct, when we receive loan is a liability, it will increase our liability. So increase in the loan, okay, we receive the loan, so our loan is going to increase, okay. So if we are owing zero amount of loan, okay, we have to pay zero amount of loan. Now we are supposed to pay 16,500 amount of loan. You get it? So our loan has increased, the loan amount has increased. Now we purchased an equipment, okay. That means if we had zero amount of equipment, now we have 16,500 amount of equipment. You get it? So what equipment has increased. That's what is in the question. You get it? Now we move to Ivan. Ivy says an increase in stocks and an increase in creditors by 8,000. So what will make our stock increase at the same time make our creditors increase? So we could see that we what purchased on credit from our creditors. Do you get it? So if we have, let's say, zero amount of stocks and now we purchase from our creditors, our stock will increase from zero to that amount, right? Good. So if we owed zero amount to our creditors and now we purchase on credit from our creditors, that means the amount we owe them is what going to increase, right? That's why we see here an increase in stock and what? An increase in creditors. You get it? Because the more we purchase from them on credit, the more we have more amount of goods there, then the more we are also owing them. You get it? Because creditors are liabilities. So now we can say that purchased goods worth 8,000 Ghana cedis on credit. Do you get it? Okay. So I will move to view. Now with the V, it says a decrease in stocks by 22,000 Ghana cedis and an increase in debtors by 24,000 Ghana cedis. and an increase in capital by 2,000 Ghana cedis. Good. So we could see that the goods was costing 22,000 Ghana cedis, and the debtors amount here increased to what? 24,000 Ghana cedis, and the capital increased to what? 2,000. So now we have to come and think of it that what will make our capital increase? Profits. Good. So that means there was a profit here, right? That's the capital, because the profit is going to affect the capital. It will increase the capital. They get it. So you should know the things that affect the capital. Good. So here they said a decrease in stocks. Good. And also an increase in debtors. That means that our debtors are people we sell to, right? And when we sell to them on credit, the people who owe us are now our debtors, as we've already said. Good. Now the question says a decrease in the stocks we have, and also an increase in the amount the debtors owe us. So now we can say that we sold goods costing 22,000. The amount of 22,000, the stock that decrease was 22,000. Then the increase in debtors amount was 24,000. So we can say that we sold goods costing 22,000 for 24,000 on credit. Okay, good. So now there's no, you see this one is not showing the capital here, but you definitely know that 22,000 and 24,000, the difference is 2,000. Therefore, the capital is going to increase by what? 2,000. Good. So now we can say sold goods costing 22,000 for 24,000 on credit. Do you get it? Yes. So if you want to cross check, you could see that when we sell goods, our goods will decrease. That's what the question said. Decrease in stocks. Okay, by what? 22,000. So our goods will decrease for 24,000. We sell to debtors on credit. Okay, good. So if the debtors were owing us zero amount, okay, now they owe us 24,000 Ghana cedis. You get it? So the amount they owe us has increased from 0 to 24,000 cedis. Okay, even if they owed us some amount, let's say 10 cedis, now we sold to them on credit for 24,000 Ghana cedis. So they are going to increase the amount they owe us is going to increase by what? 24,000 Ghana cedis. You get it? That's why there is an increase in what? The debtors amount. You get it? And there is a decrease in the stocks because we've sold the stocks. You get it? Good. So yes, that's the last question. Good. So that's all for the question 3 for accounting equation. Hope you've understood it well. If you don't understand anything, drop your question in your comment section. I'll come there and answer your question. Thank you very much. My name is Mike.